Hello dear student, I am Dr. Vasant Boraste from Department of Commerce, KTHM College Nasik. Today I am going to discuss with you another example of accounting standard, that is accounting standard 14. So let us start S14 example. So here is the example of accounting standard 14, that is accounting for amalgamation. You may take a screenshot of this example. This is very easy example. So let us start. Problem number 6. A Limited takes purchase B Limited by paying 1 lakh equity shares of rupees 10 each at rupees 15 each as a fully paid up and rupees 2 lakh in cash. The total assets of B Limited is worth of rupees 20 lakh and it has only one liability of sundry creditors which is taken over by A Limited. Find out the amount of goodwill or capital reserve. So this example is very easy example. The assets are given that 20 lakh assets and one liability is there. So we have to calculate the goodwill or capital reserve. So let us start the solution. So here you can see the solution. So first of all you have to draw a chart, that is a calculation of amount of goodwill or capital reserve. First of all you have to mention the calculation of amount of purchase consideration. So example is very easy and you must know the formula, that is purchase consideration formula, which is PC, that is purchase consideration, equal to assets taken over minus liability taken over. So in our example, assets taken over is rupees 20 lakh. So we are going to mention here total assets taken over. The amount is 20 lakhs. So 20 lakhs here I am going to putting the amount 20 lakhs. Okay. Less liabilities taken over. In our example, there is a liability of rupees 2 lakh. So the total liability 2 lakh. So assets taken over 20 lakhs and the liability taken over 2 lakh. That means we have to deduct this amount from the assets taken over. So minus 2 lakh, amount will be 18 lakh. So 18 lakh is our purchase consideration. After considering the formula, purchase consideration equal to assets minus liabilities which are taken over by the new company. So this is assets taken over and we got the PC as 18 lakh. Now what is our question? Our question is that find out the amount of goodwill or capital reserve. So we have to find out the amount of goodwill or capital reserve. So for that we have to find out the discharge. So here is the discharge given. A Limited by paying 1 lakh equity shares of rupees 10 each at rupees 15 each. So the amount of equity share, that is discharge of PC, is 1 lakh equity shares of rupees 10 each at rupees 15 each. That means one share value is 10 but the payable amount is rupees 15, that is 5 rupees is a premium. So 1 lakh into 15. So amount will be 15 lakh. It's so easy. 1 lakh into 15 lakhs. And another amount is given, that is cash. You can see here, and cash rupees 2 lakh. So in discharge cash rupees 2 lakh. That means the discharge of PC is given rupees 17 lakhs. So answer you can see here 1 lakh as a capital reserve. As I earlier mentioned that if the discharge is more than the purchase consideration, at that time there will be goodwill. But if the discharge is less than the purchase consideration, then it will be capital reserve. So in this example, as per accounting standard 14, the value of capital reserve is 1 lakh, just because 18 lakh is purchase consideration and discharge of PC is 17 lakh. So it simply means that the amount of purchase consideration is 18 lakh and we paid a consideration or we paid a discharge of rupees 17 lakhs. That means we are going to pay say 1 lakh less amount, or we can say a minimal amount of rupees 17 lakh. That means 1 lakh is shortage. So this shortage is from our point of view, that is our company's point of view. So that's why it is called as capital reserve. So equal to 18 lakh minus 17 lakh, answer is 1 lakh. So you can see here capital reserve is 1 lakh and as per accounting standard 14, the value of capital reserve is 1 lakh. So this is our answer that which is asked over here, find out the goodwill or capital reserve. So in this way you can calculate the capital reserve or goodwill. Now let us start our example number 7. Just we have finished our example number 6. Now we are going to start our example number 7. Here is accounting standard 14, accounting for amalgamation, example number 7. A limited take purchase B limited by paying 10,000 equity shares of rupees 10 each as fully paid up, and rupees 5,000 preference shares of rupees 100 each as fully paid up at par. At par means at the face value. So here face value is 10, and for preference shares, in case of preference shares, the face value is 100. So at par we are going to pay the amount to the company, and rupees 50,000 in cash to the shareholder of B limited. So we are going to pay an extra amount 50,000 as cash. Then what is given? The total assets were valued rupees 8 lakh, and also the liabilities of rupees 2 lakh. So the assets taken over is 8 lakh and liabilities taken over is 2 lakh. So that means PC will be 6 lakhs. Is it easy? So 8 lakh minus 2 lakh, 8 lakh assets taken over minus 2 lakh liabilities taken over. Calculate the amount of goodwill. So we are going to calculate the amount of goodwill. So here you can see the formula again is easy. Purchase consideration equal to assets taken over minus liability. You may write down it here. So 8 lakhs is total assets taken over minus total liabilities taken over is 2 lakh. That means the purchase consideration is 2 lakh. So here answer is 6 lakhs. So 8 lakh asset taken over, 2 lakh liabilities taken over. That means purchase consideration is 6 lakhs. Now we have to discuss about the purchase consideration and its discharge. We have got the PC. Now we have to calculate the discharge of PC. So what is it given? 10,000 equity shares of rupees 10 each. So 10,000 equity shares of rupees 10 each. Amount will be 1 lakh. And 5,000 preference shares of rupees 100 each. Here it is given 5,000 preference shares of rupees 100 each. So 5,000 into 100, amount will be 5 lakh. Okay, and another extra amount which is given as a fully paid and part at par, as well as and rupees 50,000 in cash to the shareholder of B limited. So 50,000 cash will be given. That means the purchase consideration was rupees 6 lakh, and we are going to pay rupees 6 lakh 50,000. So 50,000 is an extra amount. It is called as goodwill. Answer is here 50,000 goodwill. In the last example, the purchase consideration was 18 lakh and we paid a discharge 17 lakh. So there was a capital reserve of rupees 1 lakh, because PC was 18 lakh and discharge was 17 lakh. That means 1 lakh was shortage. But in this example, PC is 6 lakhs and we are going to pay an extra amount. So that extra amount will be called as goodwill, because the valuation of the company which we have taken over, that is 6 lakh, but we are going to pay 6 lakh 50,000. So 50,000 is an extra amount and it is called as goodwill. So as per accounting standard 14, the value of goodwill is rupees 50,000. So 50,000 is goodwill as per accounting standard 14. With this, I would like to say thank you. Thank you very much. In the next example, we will see another aspects of purchase consideration, that is F14, accounting for amalgamation. Thank you.